Thank you for having me back in this video. My name is Steven, and today we shall be looking at key levels. What are key levels? Why we are trading? What are the importance of key level to our trading decision? These are what we are going to be looking at. We are going to be considering how key level is so important to our trading. Now, without further ado, let's go straight into the chart and look at how I plotted my key level to all my trading system so that we can have a vivid information about how key levels are being used. Now, here is 4-hour chart from here, and we are on Euro USD. We've been on Euro USD. Now, if we are talking about key level, these are levels that when prices approach this level, they tend to have a return. They tend to retrace back to where they are going, or possibly they stop at that area. Now, if I could recollect in 2008, during the crash of 2008, when we have the burning down of the World Trade Center, and America has to go to war with the Afghan. They have to spend a lot of money going to war. We realize that at that particular time there are a lot of problems with American dollar. That is, dollar continue to suffer a significant loss in the market. Now let's check how this war affects the American zone and what key levels happen to do with the information that I'm about to pass to you. Now this is weekly chart from here. I have a weekly chart from here, and let's go down to 2008 and see what actually happened during 2008 when we have a crash of 2008. Now I'm still moving to 2008. Now I am on 2008. You will agree with me that from here, American dollar was actually crashed. That is, the dollar continued to fall as a result of war that America involved themselves into after the burning down of the World Trade Center. Now, when this happened, look at for like about 3 to 4 years before then, look at how dollar began to suffer from this situation before they went to the war. Look at it from here. This started from 2002. Look at that's the information I'm able to get from here from 2002. That is, euro and other currency continue to move in the market. They continue to overshadow the American dollar. Now, by the time they return from the war, look at what happened from here. That is, from here, the euro continue to appreciate and all other currency continue to appreciate against the US dollar. But when President Bush returned from the war, then they have to introduce a bailout package into the system. And after the bailout package, look at what happened from here. There's a crash of this system. There's a crash of the market. Look at the crash from here. That is, from here the prices fall significantly down to this place, and this means that a lot of traders will continue to take profit, continue to make money from here. But what I want to bring out is not about the crash, or it's not about the situation. What I'm trying to bring out here is that I am looking at those figures that are very much significant while we are talking about trading, that we are looking at the chart. Now I want to tell you that any number that ends with 00, or those ones that end with 5, so we call all this number the mid-range number and the big numbers. Now if you look at this place during the crash, before the crash happened, there has been an announcement. Now I want to tell you once, immediately the prices of any chart is approaching, of any currency is approaching the big numbers, that is approaching major big number, there is always going to be an announcement into the in the world. That is, there will be an announcement, there will be a lot of news telling us that we are approaching particular levels in this in the market. We are approaching with the particular instrument that we are trading. Now if you look at this place now, immediately the euro approached 1.600. That was when we had the crash in 2008. Now before then, we've been told that everybody should exercise patience, you should be careful while trading, because we are going to have a serious crash from the market, because when they return from the war, they introduced $800 billion, which is one of the first money that was first released after the crash. So immediately the money was introduced. Look at the effect from here. So what I'm saying in essence is, immediately the prices approach 1.633. That is, the prices approach 1.600. This is exactly what we have from here. So, and I'm going to move down to tell you that while trading, we need concrete information about the situation in the market. That is, we need to get better information about what is happening. We can't just be trading without having proper information in the market. Now, I want to tell you how I plot my key levels. How do I actually plot my key level? Now, if you look at this line from here, this is how I decide to plot my key level. I try to take into cognizance every areas of support and resistance. That is, I am taking every areas of support and resistance from here. Now, if I want to plot all this, I'm going to do this. Then I want to take into account all the shadows that is here. This is the shadow that is here. I'm taking everything into account. Then I come to this place. I'm taking every shadow into consideration. Look at it from here and even here. So I'm taking everything into consideration. I want to see how the system will continue to unfold itself from here. So now I don't want to waste much of our time. I have to move down to a proper chart that I've drawn. Look at this place. I have to pinpoint every area, that's every possible area that I could see that the market has made the chart or the prices has made a U-turn. So these are the areas. So I have to plot everything to tell you. And all this horizontal line that we have here signify major key levels in the market. They are telling us that we have a reversal at a particular point in time. So that is why we have to draw everything to take note of those information from here. So I am putting every information for us to know that key level is very important while trading. Now, if I have to move back to another time frame, you will begin to see the numbers, how the lines, how the horizontal line continue to unveil themselves for me to be able to have proper trading. Now, if I move down again from here, look at it from here. So look at, this is 4 hours. You understand that I am taking every area that I have shadow at the top. Look at it from here. So let me take this place again, because this is another area that we need to take again. So we have to pick everything. So all these levels, when prices continue to approach all this area, what do we expect? We are going to see a turn back or a run up from that place. Now let's see from here. Let's go back to 1 hour. Are we seeing that now? From 1 hour now, we begin to see more space within those levels. We need to see more space around those levels. We need to see how prices are moving and they are respecting the levels. We are seeing how prices are respecting the level. Here is another one from here. Let's speak it from here. Prices has to respect all the level from here. So this is another one from here. So we are picking all possible shadow. That is all possible shadow. That is all. And we want to see what actually prices are doing around that area. Now, what is so important about this level is about those big numbers and the mid-range number. Now let's try and see how those numbers actually affect our trading system. Now if I come to this place now, what I'm saying is that in every key, that is in every key levels, we must have number that end with 0 and number that end with 5. Now what I'm saying in essence is that this number that starts with 5, 10, 15, 20, 25, 30, 35, 40, 45. This number fall within the big numbers and the mid-range number. That is, big numbers are number that end with zeros, and mid-range numbers are number that end with 5. Now, if you look at this place now, you will agree with me that I'm having my big number. These are my big numbers. So my big numbers start from, let's say I'm having big numbers from here. My big numbers start from is 0, 0, is 0. Whenever you have this kind of 0, then you start from 0, 0. Then we also have 10, any number that ends with 0. These are big numbers. We have 20, then we have 30, then we also have 40, we also have 50, we also have 60, and we also have 70. We also have 60, 70, 60, sorry about that, 60, we also have 70, we have 80, we have 90, and we also have 100. Now, these are numbers. Then from 100 we could be having 1,000, 000. Then we have 2,000, 000. These are big numbers. Whenever prices are approaching this number, as a trader, what I expect from you is for you to exercise patience and see what are the previous action of prices when they get to this number. And that was exactly what happened in 2008 when there was a crash of the dollar. So immediately they came back, they introduced the bailout package, especially when it comes to pounds. They introduced a bailout package when pounds get to 2000. When cable get to 2000, it couldn't move further again. And what happened? There was a significant fall in pounds. And also in euro, we have significant fall when it got to 1.600 in 2008. Now, then these numbers are referred to big numbers. Then the mid-range number, which is the mid-range number, which is mid-range number, are 5, 15, then we have 25, we have 35, we have 35, we have 45, we have 55, we have 65, we have 65, we have 75, and so on and so on. These are numbers that we refer to as mid-range. Now, why do we segment this market, this number into mid-range, into big number? The essence of this is that when prices are moving, they tend to store around this number. That is when they move between 1 to 10. Now when they get to 10, they might be moving from 11, 12, come back to 10. 11, 12, come back to 10. Now before you know what is happening, there could probably be a breakout, or there could be a store at that area. So, and the same thing happened to the mid-range number. When it got to 5, 15, 25, 35, prices often do what? Often store around that area. And that is why we refer to this area as key levels. We refer to it as key levels. Now, let's see how this goes for today. Look at it from here. Now, let's continue to identify those key levels. Now, this is 5 minutes. Let's see how prices are behaving on the key levels. Now, if you move from here to here, you will realize that these are the lines that are drawn from a very bigger time frame to a lower time frame, and I'm having all these key levels. Look at how prices is respecting this key level. Once they move from here, look at what happened. Now let's go back again. Look at it from here. When prices got to this place, what happened? It's come back again. It comes to this place, it comes back again. Now, when you are trading, what you need to take note is whenever we are approaching all this line that I drew from here, you need to take into cognizance. You need to see what prices are doing at that area. If you enter from here, you take whatever the market gives you, then you exercise patience. Look at what happened, because it's an area. Look at what happened from here. The prices come back again. It tested this from here. It break the line, and look at the way it goes until it come back to another number that we have, another level that we have here. Look at what happened from here. The prices did what? It did move back again. So this is going to be what we are going to be seeing during our time of day. When we are trading during time of day, we need to take into account every levels that are drawn. Look at it from here now. Look at the price from here. It goes to this place. It continues to store around here. It find a way from here. The following day, it find a way from here. It got to that level again, and this level is corresponding with my 240 moving halfway. Then it got to that level. It find a retracement at that level again. It comes back. When it got to this place, it comes back again. The retracements or pullback will never happen ordinarily until we have those levels that price has been respected previously. Now look at this place. All this area that you see this retracement that are happening is as a result of the key levels. It's as a result of the area that key levels has occurred previously. Now it will never happen ordinarily when there are no key levels. Now what you need to do as a trader when you are trading this, you need to take into account this very figure that is here, this figure that is showing here. When this figure is moving to, probably this one is moving to 2100. Now we have 2100. You should take into account this. That is the essence of putting this line here, of putting this signal. We call it signal price. So when it is moving, you have to continue to watch the price. Now what happened when it got to all this area? What happened when it got to this area? That is the essence of this. This is not here for a joke. It is here to tell you, to signify figures, to signify that, okay, when prices are moving, approaching those big numbers, prices are tend to respect the big number. Now let's move back a little bit and see how prices are moving around the big numbers. Look at it from here. Are you seeing this now? When they touch here, they come back. Even when they come to this mid number around here, they still retrace. That is, they store around that area. And when they come here, what happened again? They rebalance again. So this can allow you to know when prices are going to do what, are going to reverse, when prices are going to change their direction. Prices will never do this ordinarily until there are levels that will compare the prices to do that. Now let's move back again and check the levels again. Look at it from here again. When they approach this area, they come back to make a retracement around this area again. Once they go to this area, what happened again? They move back again. They continue to find they continue to find another way. Even when they get around this place, they retrace again. When they touch this line, when they've never touched this line, there are no rebounds. But when they touch this place again, look at the rebounds. Look at the way it goes. It comes here again, you touch it and come back. Now, all these levels has been there before price got to that area. That is, they have been existing before the price of the day comes to do what? To respect them. That is, when they form, they move along those levels. When prices are moving, they move along those and they react to those levels. Look at it again. Even if this is a news that come up out of any zone, you could agree with me that when they move, they cause a spark from here, and what happened? They retrace back again. When they move, they cause a spark, and what happened? They find a support around this place. They find a resistance at the top. They find a support around this, and when they keep moving again, look at where they find their resistance. So we always respect key levels. So, and those key levels is what we refer to big numbers and what? And the mid-range number. And those big numbers are previous areas of support and resistance. They are previous areas of support and resistance. So we cannot joke with these while trading. Now let's look back again and see how the key levels are moving. Look at it from here again. Once the prices approaching this area, mind you, we are on 5 minutes chart. We begin to see clearly what are the levels are doing. If I come down to a bigger time frame, you might not be seeing this line that is here like this. You might not be observing them properly. But from here, look at it from here. Look at it from here. Look at how this level has continued to hold the price. They've continued to give the price quite a number of problems. Look at it from when they approach this place, they come back. When they approach this place, they come back. Now, with this information at your disposal, you can take a trade. You have a pre-information, pre-knowledge that when prices are moving to this area, they will probably retrace. Now, once you have this at your disposal and you are getting an entry around this area, then you put your target a little bit closer to this place and you take profit for the day. Then you move back again, you can see that, okay, once these prices go to this place and you see that the prices are behaving funny, before you can have a mind and you want to make a reversal, you must see how prices are behaving very funny. Look at it from here. They are behaving very funny around this place. You can see that there's a lot of consolidations around that area, and that consolidation is happening on this line, which is the key levels around this place. It's happening around this red line that I've drawn from a previous time frame. And once they got to this place, look at what happened. They find until they move to this place, they find a move around this place and turn back again. Now let's go back again and see how the key level has been working. Look at it from here. These are classical examples of how key levels have been working. Look at it from the prices break the 240 moving average from here. Once they enter this key level, look at what happened. They continue to find series of retracement. They come back, they touch it, they rebound back. They come back, they retouch here, they rebound back. They come back, they come here, they touch it and rebound back. They come back and touch it and rebound back. These are classical way of moving. Now, this is to tell you that whenever you are trading, all this retracement that you have here is as a result of the key level that has been there. Prices continue to respect those key levels. They will never do that ordinarily. Now, because of this, look at what happened from here. They come here and respect the key level. And once they got here again, look at what happened. They continue to do. Now, when you are trading this, what you need to do is, by the time you see all these levels that are here, what you need to do is you have to allow the 240 moving average to cross and see how prices are doing what are moving within the key level. That does not mean you want to take profit, but you see the reaction from here. You can probably take your profit around this place, but you must observe the reaction of those key levels. That is the essence of the key levels. Those are the essence of those big numbers that we have in that place. Now let's move back a little bit again. Let's continue to move back and continue to see how prices are doing. Now look at it from here again. Look at it from here. When prices approach this area, look at how the levels continue to do, how the prices continue to respect those levels. Definitely they will respect it, because that was the area that we have pre-negotiation in the market before now. Now look at it from here again. Once you come here again, look at it from here. They never do anything. They can never move or taking any action before doing anything. Now once they break that level, that is to tell you that they will move to another level and form another new low. And when this happens, there will always be an announcement that, okay, euro US dollar has formed a new low, or possibly they have formed a new high, and this high they form has will probably be 10 years high, or 15 years high, or 5 years low. You understand? Now when they are getting to that low, they will always meet another key level at that area. They will never do that. They will never move down without respecting those key levels. And this is exactly what has been happening around this place. Look at when the prices move from here, it got to this place. What happened from here? They continue to respect the key levels. They break the key. They were unable to break the key level. Look at what happened. They continue to move. That is to tell you that this area, this line that is here, is very, very critical to us as a trader. It's very, very important to us as a trader. Now let's move from here. Let's see another way of identifying the key level. Let's see, like, are you seeing all this area now? Are you seeing the way all this area is moving? So key level is very important in our trading. So at your own leisure time, I just want to implore you, take your time, identify those areas that you have shadow. Start from a bigger time frame, from monthly chart or from weekly chart. Continue to identify those areas. Continue to make sure that those your horizontal lines that you are drawing, they fall within what? Within the shadow, within the upper shadow. And when you have picked them accurately, you come back again to a lower time frame. You come back to again those areas you could not pick very well. Look at it from here now. Let me pick another one from here. So that's because, yeah. So those ones that you could not pick very well, you come back again to a shorter time frame to identify them. Like from here, okay, if there's area that you see that we have a shadow, you could not get them properly, like what we have from here in a bigger time frame. Look at it from here. I could not get this properly in a bigger time frame, so I have to repick it in a shorter time frame in 4 hours. So by the time you move to a lower time frame, you will continue to see how those levels have been respected. How those levels have been respected. This is what, I believe, with constant practice, you'll be able to get how to trade with key levels. Key levels are very important when we are trading. How to trade along those big numbers. They are very, very important. So I want to wish you good luck, and I want you to subscribe to this channel so that when I release another videos in the future, you will be the first person that will be notified about the video. Just subscribe. Let's build up community of traders together so that we can defeat this crazy market together. And I wish you good luck in the week ahead. And I say thank you.